All right, what is up, tycoons? What's up, traders? We're going to take a look at Blur today. Blur is brand new, all right, new token listing, and it's looking very good. It's got some very nice setups. We're going to break down the TA on those, as well as go over some of the news about it, okay, as it is relatively new to a lot of people. So we're going to jump straight into it. Make sure to smash the like button, subscribe to the channel if you guys are new, and we'll go ahead and get started with our video. So we start off here, we can see that Blur has now been listed on KuCoin, right? And some of the highlights are it covers multiple NFT marketplaces, faster snipe reveals, less gas fees, and advanced portfolio analytics. That was on February 14th, 2023, just a few days ago. Now, if we take a look here, okay, and this is Blur's official Twitter. I definitely recommend following them so you can stay up to date. But Blur is now live. All traders across all marketplaces in the last 3 months, care package holders and creators are eligible for the airdrop. You have 60 days to claim your Blur. Time is ticking. Now, Blur did more than 3x the volume of OpenSea in the last 24 hours. And this is a dashboard from DGen's link below. And so you can see here that Blur had about 73 million, while OpenSea was about 23 million. So 3x the volume there, guys. Okay. Now, the Blur bidding pools have reached a new all-time high of $84 million total value locked, or around 1.5 Aptos, 1.5 times Aptos total value locked. This is a huge win for the Blur community, which has been distributed 360 million Blur and will continue to receive Blur in future community releases. Now, here we have the chart itself. We're going to go over a few different chart possibilities here, but we have a three-wave structure. So if you're not familiar, a lot of cryptocurrencies and just trading in general, they tend to move in three-wave or five-wave structures. Now, we also have a couple of other things on here. Okay, we have our bullish price targets to the upside. If this three-wave structure is going to play out, we should come up to about 1.23 as well as 1.34. All right, that's going to take it. That's going to be our realistic bullish price targets if you are trying to trade this. Okay, remember, no financial advice, just breaking down some data and some news for you guys. This chart is nothing more than pure data and just, breaking it down for you. Now, we also have 1.478 and 1.654 as some bullish price targets. We'll get into those in the next slide. I think that we would end up needing a five-wave structure to do that, but we could hit that off of the three-wave structure. Now, if you notice, there's three lines right here, and it says bearish below. These are the major Fibonacci retracement levels. And the reason that these are so important is that these three, the 38.2, the 50%, and the 61.8%, these are the three most common and well-respected retracement levels, meaning that nothing moves in a straight line up, right? Or in a straight line down. You get a move up, retracement, continuation of the trend, or you get a move up, retracement, consolidation, and then break through those retracement levels, then that's when you can potentially get a reversal. So we've done a very good job. We had our impulsive move to the upside, we've retraced, and look at how well we've held the 61.8% level. Now that's going to be 0.8911. So pay close attention to that level. Notice how each time we've dipped below it, we have not closed below there, right? So when it says bearish below, we need to actually close below there and start actually trading down below there rather than just quick wicks. Right. So obviously there was some profit taking. We've had a completely healthy retracement. And if these retracement levels are going to hold and we continue to push up higher, these are going to be the bullish price targets that I gave you guys. Okay. Now, I did mention we had some more bullish price targets to the upside, and in my opinion, that would coincide with more of a five-wave structure, okay? Now, we could get an extended wave 3 that could take us up to there, but most likely what I think is going to happen is we're going to get our 1, 2, 3 up. We're going to come around between that 1.23 and 1.34 price targets, and then get another pullback, right? And we would update our major retracement levels at this point, okay? Because these are the retracements from the swing low to the swing high. And obviously, if we put a new high, we're going to have to adjust it to the new high to figure out the new support levels. But like I said, after that wave 3, it wouldn't surprise me if we end up getting another type of pullback, ultimately to lead to a wave 5 for that bullish structure. Now, the next slide, okay, is going to be a little bit more comprehensive and a little more detailed, but it's some really, really good stuff that you guys should know, especially if you're trying to trade, okay, not necessarily just buy and hold stuff. So the first things that I want to highlight are supply and demand zones. These are just simply areas where there's an imbalance and price gets pushed up, right? So there's an imbalance of demand in this region here where buyers push the price up much higher, okay? And then you have your supply zone overhead where there's an imbalance of sell orders, where every time we come back into this region and we wick back up into here, price drives down. So we're really kind of in no man's land right now, really just holding and testing our major retracement levels. We're going to see if we can come back up into this supply zone for our wave 3 target and potentially get a pullback. But if that imbalance of sell orders evaporates, meaning that, you know, essentially this is just an area where there's a bunch of sell orders. So as these sell orders get filled, there's going to have to be new sellers that come in to replace those orders. So if there's not new sellers, then that's when we can push higher and hit some more of those bullish price targets that we had. But if those sellers are still present there and they're still in imbalance, we do have the potential of pushing down. Now, remember, we talked about bearish below 0.8911. If we do come down to that level, we have our demand zone here where we could potentially find support. That's going to be right around 0.07, or I'm sorry, 0.7 to up roughly about 0.77, 0.78, right in between that region. Now, if we do happen to break below that demand zone, worst case scenario, we do have a bearish price target of 0.55. So I'm not trying to just be a bull and just a shill and only give you the bullish scenario. I do want to go over the possibilities of, you know, if we break our key levels, what are going to be some of the next areas of support? And if we break those, where could we potentially go as well? Just like we went over the bullish scenarios. Now, take a look at the volume right here, okay? So, you know, to support a trend, you want to see volume support that trend as well. Meaning, if you're in an uptrend, you want to see volume high. You want to see volume increasing, right? And so that's what we saw. We saw volume spike up as we raised up in price. And then look what we did. We moved sideways a little bit, volume dipped off, and then volume picked back up again, okay? And that's when we pushed up higher. So each time we've had a rally, it's been supported by increase in volume. All right, now look what's happened as we've declined and moved down. Since that period, this entire period from here to here, we've had declining volume. So this suggests that it's not a strong downtrend, right? If volume starts to pick up, though, and we're still heading in a downwards direction, then that could indicate the downtrend is picking up. But what makes me think that this is more of just a healthy retracement, ultimately setting up for that 3-wave or potentially 5-wave move to the upside, is that volume has been declining as we've been pulling back. If volume was increasing, then it would have been more indicative of a strong downtrend, right? Now, also, if we take a look at our MACD right here, we can see that this red line is just now crossing above this blue line here. That's what's known as a MACD entry signal. And if you take a look, that entry signal happened right over here. We've already started to push up. So if we're bullish, we want to see this thing continue to trend upwards and create space away from that blue line down there. Now, also, we can take a look at the relative strength index. This is going to measure the relative strength of a token at its given price. We don't have any bearish divergences right now, anything like that to be worried about. The RSI is actually above 50, okay? And generally speaking, RSI above 50 is leaning more towards the bullish sign. So we have the first attempts of some bullish signals here on the MACD as well as the relative strength index. Also, volume is indicative of a weak downtrend versus a strong downtrend. We're holding our major retracement levels, and we know the key levels to the upside and to the downside to pay attention to. If you enjoyed this video, smash the like button, subscribe to the channel if you're new. This was a viewer request. I do viewer request every single week, so all you have to do is comment down below and I'll make a video on your token, your cryptocurrency as soon as I can.